bring in money expert Rubina Ahmed-Haq. Rubina, the three main U.S. indexes ended the day higher. What is driving this, and do we expect it to continue?
The markets like Trump. Trump is a very business-friendly president, and the markets are reacting with that expectation that they are going to see larger and larger profits, not just in 2025, but for the full 4 years that he is in the White House. There was also really good earnings coming out from 3M. That's what pushed the S&P 500 higher yesterday. So a number of things happening at the same time, but really overwhelmingly the expectation that Trump is going to be good for the bottom line of big corporations is pushing these markets higher.
All right, you joined us yesterday to talk about some of the effects when it comes to these proposed tariffs. Let's drill down on that a little more this morning, if we could, Rubina. What do you believe is most at risk for Canadians if the Trump tariffs, if they do indeed go through?
A lot of everyday items. For example, breakfast cereal. We buy most of our breakfast cereal from the United States. That could be affected. Streaming services like Netflix and Amazon Prime, if there's tariffs put on American media, we could be paying even more, even though Netflix today announced that they're going to increase their subscription costs. That could be even higher if there were tariffs on there. Things like pickles and coffee, Kentucky bourbon, alcohol in general from the United States. All of this that we buy in large quantities from the U.S. that consumers here use in Canada could get more expensive because those tariffs, like Mercedes just mentioned, they are then absorbed by the companies here and passed on to the consumer because it costs them more now to bring that same item across the border.
All right. In the meantime, inflation, Rubina, came in lower than expected for December. How will this impact the Bank of Canada's rate decision scheduled for next week?
So economists are expecting at about 82% that we're going to see another rate cut next week because inflation did come in below that 2% target at 1.8%. A lot of the reasons why we're seeing lower inflation is because of the GST holiday. Restaurants, for example, the cost to eat at a restaurant was down the most it has ever been month over month in the month of December. And that was when the GST holiday was only there for half the month. So you can imagine how that's going to be even more dramatic for the month of January. So that is, of course, on the minds of the Bank of Canada and the economists that are deciding what we're going to do next week with the interest rate announcement. But definitely with those lower interest rates, with those lower inflation numbers, we are expecting interest rates to come down, which is great news for homeowners, for those who are struggling to make their mortgage payments, and anyone who's in the housing market right now can borrow a little bit more to bid on that same home.
All right. A lot of people will be keeping a close eye on that announcement, again, expected for next week. Rubina, thanks for this. Appreciate it this morning.
Thanks for having me.